Since well before I was born, people regularly ponder, what's a better investment, growth stocks or value stocks? Now, some of this is about the stocks, and some of this is about you, or the person that would entertain the question. Simply, in the very long term, growth and value do the same, really similarly. By that I mean the very long term, however. Neither one is particularly better because in the long term, shifts in supply for equity of any category, including growth and value, will overwhelm any shifts in demand for the category. In my Only Three Questions book, I wrote basically a whole chapter on that topic. How supply overwhelms demand for any category, including growth and value. But in the shorter term, one of them leads, one of them lags, almost always. And that goes on for a long time. Often people come to think that that category is going to be permanently better. It won't. Often, as in recently in this year, a lot of people say, this category's due because it's been underperforming for a long time. That's never, ever true. These kinds of things, categories of stocks don't move from underperforming to outperforming because they're due. Markets don't do, they're due. What markets do is shift when fundamental forces that are not pre-priced into the market make one of them favored. The thing that really drives value, which has been lagging now for quite a long time, other than short-term irregular spurts, the thing that really drives value is after a long bear market where the spread between short and long-term rates has been flattened or inverted, where short rates are above long rates, which causes banks not to lend to lower quality or the perception of lower quality and value stocks, and they get financing starved, and they plunge from that over a rugged long period, and then the yield curve goes the other way, and long rates get way above short rates, and the banks start lending more aggressively with a time lag. It's that time lag from the yield curve getting steeper that drives value stocks doing better than growth, but that's not now. So now it's a better time for growth. On the other hand, let me just make one more point, and I'll do this very quickly. Some people are just better at doing value stocks, and some people are better at doing growth stocks. And that's the part, as I said at the beginning, is more about who you are than about the stocks themselves. So if you're better at value, stick to value. If you're better at growth, stick to growth. But don't think that there's a time for one over the other because it's fundamentally better or because somebody tells you now's the time. Except I'm going to tell you this is the time where growth's been doing better and it's going to keep doing better until we see that yield curve getting steeper. Subscribe to the Fisher Investment YouTube channel if you like what you've seen. Click the bell to be notified as soon as we publish new videos.